Welcome back. Now, the leaked report from the current Public Protector's Office on the loan between Bankorp and the South African Reserve Bank has caused quite a stir. The deal dates back to 1985 when the central bank bailed out Bankorp, which has since been acquired by ABSA. In 2002, a panel that was appointed to investigate the Reserve Bank's role found that the South African Reserve Bank had acted outside its authority, even though there was no evidence of intentional dishonesty. And now the leaked report recommends that ABSA pays back the sum of 2.1 billion rand. To help us unpack this, we're now joined by Professor Jannie Rossouw, who's the head of School of Economic and Business Sciences at WITS, and also you were working at the Reserve Bank at the time, Prof.
Yes, indeed. Good morning, Peter. Good morning to our listeners. This morning I also want to say good morning and thank you to all the people in the studio helping us to make this show possible.
Fantastic. So, Prof, I'm so glad that you were in the Reserve Bank at the time, so you would have seen the transaction firsthand. Take us back to that time, and it's not an unusual thing that happened. The Reserve Bank is the lender of last resort, and I believe that in the 1970s, African Bank was bailed out. In the 1980s, Nedbank was bailed out. So what was peculiar about this particular bailout?
Peter, this bailout of Bankorp actually started in 1985 and continued until 1994. So it went over the period of two governors. It started in the time of Dr. Gerard de Kock, ended in the time of Dr. Chris Stals. It was a period of 9 years, which was considered long. And secondly, it had consecutive aid packages. So Bankorp didn't disclose the full extent of its problems to the Reserve Bank. So it disclosed a bit of a problem, and then the next year a bigger problem, and the year after that a bigger problem, and continuously disclosed bigger problems and asked for more and more aid. And the fact that it had consecutive aid packages made it
How could they get away with
others.
that? I mean, there's auditors, oversight committees that look into banks. How could they get away with not fully disclosing their distress?
Well, in a bank, to decide on distress or not, you have to do valuations of assets.
Right.
And asset valuations are very subjective. So if you have a small tweak in your asset valuation, your figures look different. Okay. And Bankorp used that at the time. And I must say, bank supervision was not as sophisticated back in 1985, 1986, 1987 as bank supervision is today. Bank supervision, bank regulation, much more sophisticated today, amongst others, to prevent a repetition of what we saw in the Bankorp case.
So let's look at the transaction. At the time, it was Bankorp, then Sanlam. How did ABSA get into the picture? And this Public Protector's report, what is it investigating?
Bankorp was a holding company of a number of banks, the biggest of which was Trust Bank. Bankorp, in turn, was owned for more than 80% by Sanlam. And I must add that Sanlam at the time was not a public company, but a mutual company owned by its policyholders. And the single biggest problem in the Bankorp group was Trust Bank, which had bad debts. So without the aid package, Trust Bank would not have been in a position to repay the deposits of its depositors at the time. People who had deposits at Trust Bank would have lost their money.
So why did the Reserve Bank help?
Well, number one, to make sure that the assets of depositors were protected. Number two, Bankorp was a big and serious bank in South Africa. It was about the fourth largest banking group in South Africa at the time. And without the help, the exposures of Bankorp to other banks in the South African banking system would have resulted in systemic problems at other South African banks.
The Davis committee said that the Reserve Bank acted improperly. How so?
The Davis panel, chaired by Judge Dennis Davis, reached the conclusion that the length of the assistance is questionable, and that in later years the construct of the assistance, it was called a simulated transaction, didn't meet the best international practice at the time.
All right. So you lend somebody money, bail them out, but they're supposed to pay it back. Did that happen? And what went wrong?
Yes, in the case of Bankorp, the money was paid back. The capital that was advanced was paid back, but the interest assistance was not paid back.
Why not?
So the assistance was structured as interest assistance, and in a sense the interest assistance was used to repay the deposits of the depositors in Trust Bank because there was a mismatch between liabilities and assets in Trust Bank.
So, in theory, who owed the interest back to the Reserve Bank?
Well, the loan was given at 1%. So the 1% interest on the loan was indeed paid. So if one would want to argue after the event that more interest is now payable to the Reserve Bank, it would be necessary to work out what an interest rate should have been, if not 1%. So again, it's necessary to make assumptions about an acceptable interest rate because not only the capital, as I've said, was paid back, but 1% interest on the capital was also paid.
I'm running out of time, but very briefly, Public Protector, what can she possibly find and what could possibly be a remedy?
Well, we have a leaked report of the Public Protector and we don't know what the Public Protector will find. The Public Protector can possibly find what the Dennis Davis panel had already found, namely the construct of the transactions. But to try and go after the money, in my view, is impossible.
All right, okay. We're going to have to leave it there, unfortunately, because we've just run out of time. But this is something I'm sure we need to have a longer chat over, but hopefully we'll do that in the future.